Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading, and welcome back to another weekly watch list video. We were not able to make one last weekend. We took the family on vacation, so I was away all week long. So this watch list video is going to give us everything that we should know for the coming week. So all those big economic calendar events, all the big Fed speakers, everything that we need to know, the NFPs on Friday. I'm going to go over everything with you right here in the video, including some stock market predictions, which, we can just use technical analysis. Nobody has a crystal ball. So what we saw on Thursday and Friday seemed like a technical bounce off some really key technical areas to bounce. So I'm going to go over that with you in a second here as well. We're going to go over the SPY, the Qs, and then I'm going to go over some picks that I have for the week. So stay tuned for that. Before we get into it, this is where I'm going to ask you if you'd hit that thumbs up for the video. I greatly appreciate it. And I greatly appreciate you guys tuning in and watching our weekly watch list video. So thank you so much. If you're new, consider subscribing. So here we go. So we're going to start with the economic calendar. This is something that should always be on your mind when you're trading. Need to know what is coming up and what times these things are coming up. So Monday, Tuesday, and Wednesday is listed right here, and then I'll get into Thursday and Friday. On the next sheet, we have a lot of Fed heads here. Atlanta Fed president speaking on Monday. We have on Tuesday the Atlanta Fed president speaking. And then on Wednesday, we have Jerome Powell testifying at the House committee at 10 a.m. with other Fed talking before him, and the advanced employment report is coming out Wednesday. So this is before the Friday big time payroll data that will be on Friday. And then at 2 p.m. Wednesday is the beige book. Sometimes you'll get some really key information from that release as to where the Fed and the data is telling them to move. Now, we all know inflation is, wild right now. They need to raise rates, even with the geopolitical, tensions going on. The Fed would be very short-sighted if they did not raise rates like they were going to, before this Russia-Ukraine situation. I really believe that would be a big policy mistake if they held back on that while the Russia situation was unfolding. Inflation is just too crazy, and it's only going to be worse with the Russia-Ukraine situation and destabilizing that whole area with all the energy, the gas, the oil, just going to make gas prices even higher. So we need to watch out for that. So Thursday, we have all this coming out, and then some more Fed speaking, and you have Jerome Powell testifying at the Senate committee at 10 a.m. on Thursday. So this is a pretty heavy-duty week as far as the fundamental macroeconomic data is concerned. And then you have the NFPs, which will be a much anticipated jobs report at 8:30 a.m. on Friday. So you need to be aware of all those, whether you're swing trading, whether you're day trading, whatever you're trading, be aware, because those are situations that can move markets for either that hour, that day, whatever it is, just be aware. So this is the earnings for the week. This is something I post every day in our Discord, along with, a million other things. But this is your earnings. You can go to Earnings Whispers or follow them on Twitter. It's a really good platform they've made. I like how clean it is. You have before the open, after the close, and then you have Monday, Tuesday, Wednesday, Thursday, Friday. Very self-explanatory. That's the earnings for the week. The earnings this week are heavy duty retail. So keep that in mind as well. A lot of retail is going to be this week. So this is where we start our stock market. I call this our compass, but the market has been very difficult to predict. Now we're going to do the best we can to predict where we see, further moves. This whole correction here in 2022 is all related to the Fed changing their easy monetary policy and high inflation. This is not because of Russia. This is not because of Russia invading Ukraine. This is a correction that is normal. It happens during bull markets, and it's a correction that is strictly because of the revaluation of stocks. During this period, the easy monetary policy that the Fed gave us, that was a risk on in equities. We didn't care about valuations at this point. We didn't care about inflation at this point. And that all ends when the Fed has to now play catch up, and the deficit and the Fed balance sheet is out of control. That's what we've seen this year. I want to bring you back to before the pandemic. Before the pandemic hit, this is where the SPY was trading at. 337. We are 100 points over that. 100 points higher than we were trading pre-pandemic. So is the market extended? 1,000% extended. We see a nice pullback. Now that's good. That's good to see. It's been very difficult this year to trade, to say the least, because every time you get this and you get a bounce, right here you got 4 good days, and then it comes back down, tests the 200, gaps up over this key level here, and then just totally sells off even more, which, if people were thinking, okay, this is the bounce here, about 10% at this point, 10% correction, and this is the recovery I'm going to ride, and you have a lot of people getting long here, and then they get slammed in the head. That is not great, but it happens. That's why you don't want to be too early to these parties. Now, I'm going to bring you into what we just saw here in the last 2 days. We came down to a 15% correction zone. This area here is about a 15% drop off all-time closing highs over here on the SPY. Was it a technical bounce? Yes. In my mind, this is a technical bounce. You weren't going to keep going down, more than this. You could have went down a little bit more, but when we opened our futures, we're down so much already. At one point, I think the ES was down pre-market 130 points, something, maybe even more than that. But it was crazy. And when you open up the trading day at lows in the futures, a lot of times you will see this type of bounce. Now, it opened up so low because Russia invaded Ukraine that day. That was the only reason. The market did not want to be down here. You can tell by this huge green bar. The market did not think that Russia-Ukraine should be bringing us down to the 15% correction zone. Not yet. The market did not believe that that should be happening. And while we see the headlines, Russia invades Ukraine, everybody is getting in puts, they're shorting, and then what you have is a short squeeze, and that short squeeze went into Friday. So now you pretty much covered the gap here, breaking through this low here, instantly got right back above it. So this is your area of demand. Right now there's demand here. But what we're coming into is we are about to come into resistance, okay? You have a trend line here. This trend line is lower highs and lower lows. The market is setting up with this stair step. This is a very nice rebound on some really heavy volume. That's great to see, but until we see this trend line break, okay, that's the first thing. If this trend line breaks and holds, and then you have this blue line here that has been real resistance, except for this gap up, which I knew here when we gapped up overnight over this key level here that we could not break for about 4 days. We gapped over it. Most of the time you'll come back down just below that area because that's a gap over it. Just like this, we gapped under it and came back above it. That's what normally would happen. So this right here is your supply, your overhead supply, and this is going to be some resistance. So you have demand down here, you have overhead supply over here, which a lot of people are selling into. So this blue line here is the 20 EMA. You're approaching the 20 EMA here at 440, and then you have the 200 moving average at 445. Those are going to be, if the trend line breaks, those are going to be the next areas of resistance. And then we have this supply zone here. So if you're looking at the SPY, you have a lot overhead here for some serious resistance. So look what we're looking at. You set up a lower low, lower high, lower low, lower high, lower low. Is this going to be a lower high, or is it going to finally break out? We're going to have to wait and see, but this is the best that we can do to prepare, right? That's all we're trying to do, is we're trying to prepare where we see possible resistance overhead. And then if this doesn't, if this does reject it, then you could be looking for some more choppy trading, possibly back down, towards this trend line. And, you don't want to see worst case scenario, but that's going to be back to the 15% correction area to retest where the market brought us in the futures. So sometimes these areas get retested just like this area got retested back here. So just keep that in mind. That's the SPY. And then we can look at the Qs. Very, very similar. The only difference is the Qs bounced right off of 20% correction. So that's a technical bounce. Technical bounce from that sell-off. This is our demand zone. We've seen a lot of buying down here. A lot of buying, and then we have the resistance right here. We've had rejections at the 200. So once again, this is very similar to the SPY. We're making lower lows, lower highs for the whole year. So let's see if we could first break the 20 EMA. That would be at 350. And then you go into some overhead resistance in the supply zone, and then the 200. The stock market right now still has a lot of overhead resistance. So we're going to have to see, how the price action stacks up this coming week. We had two pretty big moves to get right back into this demand zone. Let's see what happens here, after the market kind of had that washout of sellers. So usually that's good when you get that washout. You get all the selling out of the way. You get the sellers, to have sold. It's called the washout. So what we're going to look for on the NASDAQ, which is the QQQ, and on the SPY going forward is you're going to want to see a follow-through day. That follow-through day should be about Monday or Tuesday of the next week. So even Wednesday, you could go out as far as, depending on what happens Monday or Tuesday. And you're going to want to see a big gain in the SPY or the Qs on heavy volume. That's going to mean that the bottom was put in here, and that follow-through day means that the investors, institutions are putting the big money back to work. So that we're going to have to wait and see if we get that follow-through day. It's a very, very big technical pattern that has worked for so many years, and it's good at finding bottoms. The only thing is we've had a couple of follow-through days the last few months that did not work out. And that was because we were entering a correction that we didn't really know. So right here, this follow-through day did not work. You could tell it's the fourth day. We had a move up on heavier volume than the day before, and then it sold off. So you still have to be very aware in this market that you're in a weaker market. Even seeing the nice moves the last 2 days, you're still in a weaker market. So look for that follow-through day. Let's see what we get coming up this week. So now let's take a look at what we have for our watch list. At the top, ZIM. This is a shipping company making higher highs, higher lows, and it's going against the grain with the regular market. So the SPY looks the opposite. This is showing strong relative strength. These are the types of stocks that you're going to want to be investing in while diverging with the overall market. It looks to me like this is setting up pretty nice to make new highs eventually, past this 75 area. It's over the 50, which is bullish. So that's why ZIM is on my watch list, setting up very nice pattern, higher highs, higher lows. We have Pfizer also setting up a very nice higher highs and higher lows all the way along this trend line that has now gone back exactly 1 year from today. We're bouncing off of that to the penny. To the penny, bouncing off the trend line. And this still has a very nice return if it ever got up to where it was trading. Even if it gets halfway there, you're still in a stock that pays a dividend and is at this point, bouncing off of some ascending support. So that is nice to see. It's back over the 200. So that's why Pfizer is on my watch list. Next one down, Marriott. I think everyone can agree that travel and hotels and vacations are only going to get better now that, basically the entire world is learning to live with COVID. So this one, again, diverging with the rest of the market, making higher lows, making higher highs. It's over the 50, it's over the 20, showing some really nice strength, some really nice relative strength. I think it's only going to continue to do well in this new environment. So that's why Marriott is on my watch list, and Hilton. So Hilton, I actually stayed at when we were on vacation. One of the first nights, nice hotel, had a great restaurant in there. This one is over the 200, back over the 50. Again, trading in higher highs, higher lows. This is a very nice pattern to predict that eventually it will get back over where it was back here, or at least back to that area. But this is showing a very nice pattern, relative strength to the market, diverging with the market. It's holding up while the correction is happening, which is very, very strong. So that's why Hilton's on there. And then we're going to go over a stock I'm putting on here, not because I would be buying it at the moment, but cybersecurity with this whole Russia situation. If this can break over the 50, which it hasn't been able to do, I would say that's very bullish. And if that happens and we start to make higher highs after this bottom being put in, I would say that this could be a play. You have a lot of room to the 200, but it's not, the valuation is what bothers me in this, kind of new type of year, and inflation and the Fed going to be raising rates doesn't really go well with these really high growth, high valuation type of stocks. It does have earnings coming up, so be aware of that. That's not going to be until the following week. So this week, maybe it'll give a trade if we can break that 50. That would be very bullish. If it can't and it sees resistance here, well, then it could be maybe a short. Until it breaks this 50, I wouldn't really trust it going long. But if it does and it holds that 50, that would be the first time that it's done so since its sell-off. So that would be pretty good. That would show signs that this one is ready to start to come back up. AMD, this looks like the regular market to me, although it did not make a lower low here. So it's on my watch just because it is a terrific, terrific company. And I know a lot of investors have positions in it, and they're not going to be selling it because this is a stock that's only going to continue to do well down the road. So let's see what happens here. This is what you have on the technical front. You have overhead resistance on this descending trend line. You have support down here. It's going to come to a point where it's going to choose a direction. If it chooses up, you're going to have the 50 to contend with. If it ever got over that, that would be very bullish. But AMD is always going to be on my watch list. So we're just going to have to wait and see where this one goes. But it does look like the regular market until we can start to make a higher high. It broke down under the 200, but that was only because of the pre-market. It was kind of like holding around that area. So we'll have to wait and see. It does have some overhead resistance, but that's why AMD is going to be on my watch list. And did I have one more? I'll put on here the energy sector. So every time we start to see this with the ETF, this is the XLE, this is all your energy stocks. Every time we start to see this where it gets exhausted, which is exactly what happens here, it tends to come back down. Now, it's still making higher highs and higher lows, and we can even extend this to the right. I mean, there's a long way for this thing to come back down. It's either going to retest this trend line here, which would be around 62s, or worst case, it could come down to 56. So the way that I would watch this one, instead of for the upside, I would watch this to start to come back down. This could be a short. So that's XLE. It's had its really epic run. It was way overextended. When it gets to that area on the RSI, it usually starts to sell off. And that's what we're starting to see. Even with Russia, Ukraine, Russia invaded Ukraine, and this is where we are. So can it get worse from here? Possibly. If it gets better, this is going to come back down. So that's why this one's also on the watch. So there you go. There you have it. A lot of research was done. Those are my picks. Do your own due diligence. Don't just jump into things because I said that, maybe this looks good, maybe this looks bad, or what have you. The stock market prediction is just that. It's a prediction. Nobody can tell you where the stock markets go. I find that technicals, RSI, price action, volume, these types of things can help predict where it's possible and why we see certain technical bounces during a correction, and what to watch for. So I hope you guys enjoyed the video. Hit the thumbs up if you did. If you have any comments or questions, leave them down below and I will answer every single one. Thanks for watching, guys. See you next time.